Hello everyone. Welcome to the Stock Minds web channel. Alphabet, Nasdaq, Google, the parent company of Google, continues to deliver impressive financial results as it benefits from global digital transformation, the rise of artificial intelligence, AI, and steady advertising recovery. The company's third quarter 2025 earnings report showed strong top-line and bottom-line growth, reaffirming Alphabet's position as one of the most profitable and innovative tech giants. In this video, we will dive into Alphabet recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Alphabet. Founded in 1998 by Larry Page and Sergey Brin, Alphabet Inc. has grown from a search engine into a global technology powerhouse based in Mountain View, California. Its main segments include Google Services, Search, YouTube, Maps, Android and Google Play, Google Cloud, and other bets like Waymo and Verily. Google's core business relies on digital advertising, while YouTube and Cloud drive strong growth. Other bets focus on future innovations in areas such as autonomous driving and health technology. Alphabet financial performance. Alphabet delivered strong financial results in Q3 2025, showcasing impressive year-over-year growth across key metrics. The company reported revenue of $102.34 billion, up 15.95% from $88.27 billion in Q3 2024, driven by solid performance in digital advertising and cloud services. Earnings per share (EPS) rose 35.35% to $2.87 from $2.12 a year earlier, reflecting improved operational efficiency. On a trailing 12-month TTM basis, revenue reached $385.47 billion, an increase of 13.42% from $339.86 billion in 2024, while EPS climbed 34.51% to $10.14 from $7.53. Free cash flow per share (TTM) also rose 34.53% to $6 from $4.46, demonstrating strong cash generation. Alphabet maintained robust profitability with a gross profit margin of 59.17%, net profit margin of 32.23%, and free cash flow margin of 19.08%. The company's return on assets stood at 16.28% and return on equity at 35.45%, highlighting efficient capital use. With a debt-to-equity ratio of just 0.11, Alphabet remains financially solid. Over the past 5 years, Alphabet has grown its revenue at a 17% CAGR, net income at 26.8%, and free cash flow at 12%. The company has been a strong compounder in the past and is likely to continue this trend in the future. Alphabet Fiscal 2025 Financial Forecast. Looking ahead, analysts forecast 2025 revenue of $399.58 billion, a 14.16% increase from 2024 $350.02 billion, and project non-GAAP EPS of $10.49, up 30.5% year-over-year from $8.04. Wall Street analysts maintain a buy rating with an average price target of $314.18, suggesting a potential 13.2% upside, while the highest price target estimate reaches $360, implying potential upside of 29.76%. Google stock price performance and valuation. At the time this video was created, Alphabet stock was trading at $277.54 per share. The stock has surged 64% over the past year, far exceeding the S&P 500's 18.5% gain during the same period. Over the last 5 years, Alphabet shares have risen 215.4%, compared to the S&P 500's 92.8% increase, reflecting consistent growth and investor confidence. The company recently initiated a modest dividend yield of 0.3%. From a valuation standpoint, Alphabet trades at a price-to-sales PS ratio of 8.95, with a forward PS of 8.57. Its non-GAAP PE (TTM) is 27.98, and the forward PE is 27.04. While the price-to-free cash flow (PFCF) ratio remains high at 45.53. Based on Fiscal.ai data, over the past 5 years, the forward PS, forward PE, and PFCF ratios have all been above average. While the valuation appears high, the forward PE remains at a reasonable level and is justified by the company's dominant market position, strong profitability, and consistent financial growth. Alphabet growth potential. Alphabet growth prospect remains robust, driven by several factors. 1. AI-powered search expansion and query growth. Alphabet's search business showed strong resilience and growth, with $56.6 billion in revenue, up 15% year-over-year in Q3 2025. The integration of AI features like AI overviews and AI mode has deeply enhanced the search experience, driving additional query growth rather than replacing existing ones. CEO Sundar Pichai highlighted that AI overviews had an even stronger impact in Q3, especially among younger users. AI mode usage doubled in the quarter, reaching 75 million daily active users. Those using AI overviews performed 10% more searches over time than non-users. Alphabet shipped over 100 product improvements that quarter, illustrating fast innovation cycles. These AI capabilities have expanded Alphabet's market by making search more interactive and feature-rich, especially attracting younger demographics and signaling strong long-term user engagement and monetization potential. 2. Google Cloud's enterprise AI adoption and profitability. In Q3 2025, Google Cloud generated $15.2 billion in revenue, representing a remarkable 34% year-over-year growth and significantly outpacing the company's overall expansion. The cloud division's operating income reached $3.6 billion, illustrating substantial profitability, which contrasts with past losses and signals operational leverage. Alphabet's cloud backlog surged 46% quarter-over-quarter to $155 billion, providing long-term revenue visibility and indicating strong enterprise demand driven by AI and generative AI product adoption. Management highlighted more than $1 billion deals signed, exceeding totals from the prior 2 years, showcasing larger, more committed enterprise customers. The diversification across 13 product lines surpassing $1 billion annual run rates, along with over 70% of existing customers utilizing AI products, underscores Google Cloud's leadership and rapid growth potential as a primary engine for Alphabet's future expansion. 3. Subscriptions portfolio and recurring revenue diversification. In Q3 2025, Alphabet surpassed 300 million paid subscriptions, up notably from 270 million in April. The subscriptions, platforms, and devices segment generated $12.9 billion in revenue, a 21% year-over-year increase that outpaced overall company growth. This growth was driven primarily by strong performances in Google One Storage and YouTube Premium subscriptions. YouTube Music and Premium subscriptions exceeded 125 million globally as of March 2025, benefiting from expanded original content and features. Google One gained momentum through increased cloud storage demand and tight ecosystem integration. Alphabet now has 13 product lines with over $1 billion in annual run rates, signaling a broader business model beyond advertising. These recurring revenues reduce volatility, enhance customer lifetime value, and offer higher margins. The ongoing integration of Gemini AI across these services is expected to accelerate subscription growth and monetization pathways. Risks to consider. While Google looks like a good investment opportunity, we should be mindful of potential risks. 1. AI competitive threats to search revenue. Some analysts warn that Alphabet could face a significant decline of 20 to 25% in its core search revenue this year due to competition from AI-driven search alternatives and other AI competitors. However, recent data indicates Google Search continues to show strong growth despite these challenges. The rise of AI-native tools is reshaping the search landscape, creating uncertainty around Google's traditional dominance in search advertising and user engagement. 2. Strong cloud business competition. Alphabet's cloud business faces strong competition from Microsoft and Amazon, the top 2 cloud providers holding around 22% and 29% global market share respectively. Alphabet's Google Cloud, under CEO Sundar Pichai, has grown its market share to about 12 to 13% in 2025, with $15 billion Q3 revenue, driven by AI infrastructure investment. However, the need for heavy capital expenditure to expand capacity and meet AI demand pressures margins, creating risks despite growth momentum. 3. Regulatory and antitrust risks. Alphabet faces ongoing antitrust scrutiny globally, especially in Europe and the US. The European Union has fined Alphabet over €8 billion for abusing dominance in Google Search, Chrome, and Android, with recent complaints under the Digital Markets Act alleging restrictions on uninstalling pre-installed apps. In the US, the Department of Justice accused Alphabet of monopolistic search practices and sought remedies like splitting Chrome, though divestiture was rejected. These regulatory challenges risk impacting Alphabet's core assets and require continued compliance. Conclusion: Alphabet continues to demonstrate exceptional financial strength and growth momentum, supported by its dominant position in digital advertising, cloud computing, and AI innovation. With strong revenue and earnings growth, high profitability, and a solid balance sheet, the company remains well-positioned for long-term success. Despite significant stock gains, Alphabet's valuation is still reasonable given its growth outlook. Backed by consistent performance and innovation, Alphabet remains a compelling buy for investors seeking sustainable growth and value. What do you think about Alphabet? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching and see you in the next one.